Hi, I'm Jeannie Kelly, your credit coach. And today I'm so excited to have Rod Griffin with us from Experian. How are you?
Hey, Jeanne, I'm doing well. How are you?
I'm great. And thank you for taking out this time. I know you're always so fantastic about educating all of us. And so I really thank you for your time.
No, I'm glad to be. I mean, we've worked together a long time, and it's just a passion we have. And I'm lucky to have, over the years, had some things stick in my brain. I don't know. So
Yep.
hope I can remember what all of that stuff is.
Well,
So
this is a good one because it a lot of us are filing taxes still and it's tax season. And I get asked about 1099 Cs all the time. So I'm like, I'm going to the expert and just going to dive in to ask about what's it mean, a 1099-C?
yeah, so a 1099-C form is a form that shows that forgiven debt in the context of our conversation is treated as income. And so if you get a 1099 form, it means that there's something that's happened that's now considered income for you that you have to include in your income tax filing. Usually when we think about a credit, it's related to, for example, if you have an auto loan that you haven't been able to pay and they repossess the car, they'll sell the car. And if it doesn't cover the full cost, remaining cost of the loan, they will forgive the remaining amount. And so that amount is treated under the law as income because it was something you owed and now they've forgiven that debt. So it's treated as income. That's shown in a 1099 form and that gets sent to you. And then you get to share that with the IRS.
Okay. So when someone gets one, let's say even regarding a credit card, right?
Mhm.
I've seen a lot with that. So it'll show the debt still on the credit report. And this is what's confusing others
Yeah.
because they'll say, I claimed it as income with my 1099-C. I did claim it as income. So I thought the debt was not going to report anymore and it was forgiven.
Yeah. Well, it was forgiven, but your credit report is a credit history. And so
Okay.
when you look at that account entry, what it will show is a status of, in most cases, settled and or paid for less than originally agreed. And so it's still in the report, but it has what we call a final status. It shows that that account existed, what happened with it. So the debt was settled, wasn't paid in full, and will remain in the report for a period of time and then be removed. So it's a history. So it's going to show the history and
Okay.
the status of that account. So check that when you look at the account. Make sure you look at the status.
So
Um,
what if it shows like still the full balance? What should someone do if they see the account and it's not showing settled, but they got the 1099?
Yeah, so you dispute it and
Okay.
make sure that it's updated. If it's showed as settled, and it may show the last balance that was reported to us, so that may be
Okay.
just where it is. It will show the balance, but because it's essentially closed, it's no longer active. It's settled, meaning no longer open and being used and paid. That's kind of the key element in the history at that point. Scores we'll see the settled and treat it as a settled account, which typically isn't very helpful for a score. Tends
Okay.
to hurt scores for a time, but gives you the ability to get out from under that debt if you can't afford it and help you manage your other finances better. So look at that, the settled account. So it may show that balance, but it's that status that's going to be most important.
Okay. And let's talk about the taxes for a minute. What is the amount? Like, what if someone only owed $500 and they said, like, is there a certain amount with the 1099-Cs?
That I'm not sure if there's a
Okay.
minimum amount. If you get a 1099-C, it will show the taxable amount that's being treated as income for you on that form.
Okay.
It's box number one, shows what that income
Okay.
amount was that they believe is taxable, and then a spot that shows probably no taxes paid on it because you didn't know it was going to be income until you
Right.
got that form. And so you'll have to
Yep.
include that in your income.
Okay. And on the credit report, is there a difference if an account is settled or paid in full as far as coming off the timing of coming off your credit report?
Yes. If you have a debt that's settled, that debt will remain in most cases, if you've settled a debt, it's been delinquent. I mean, late payments have been late or not paid for a period of time.
Okay.
So when you look at that account, it will be deleted if it's settled 7 years from what we call the original delinquency date of the debt. So it will be deleted 7 years from the date the account first became late and then never was current again. So,
Okay.
so 7 years from that point, it gets a bit confusing because if you have a payment due today and
Okay.
due dates today, you miss the payment. We report 30, 60, 90 days, right? So it's a full month. So next month, you still haven't paid that account. Now it's late from a credit reporting standpoint. So it's 30 days late. We'll add that late payment to your credit report. If you then immediately pay the balance and catch up, you're now current again. So next month it shows current. And then a month goes by and you miss another payment and never catch up. You'll have two different late payments on your report, right? So you have the first late payment where you missed the payment and caught up. That payment will be deleted 7 years from the date of that missed payment.
Okay.
And then 30 days would go by because you were current for a month. And then the rest of it would be deleted because now you have that date after which you never were current again. So I get people ask me, well, I was late. Which one drives it? Which one is the one that it is deleted from? It's the one you missed and were never current again after. That's the 7-year time frame, and that can't change. That's part of the law. Most of the time that happens with collection agencies or collection accounts. As when we see that, we treat a collection account as a continuation of the original debt. So 7 years from the original delinquency date of the original debt, that's for originals today. We delete that first account and the collection. So that's kind of an important thing people misunderstand too.
Okay. And then what do you think when it comes to the settled accounts or collections? What do you see at Experian as individuals not understanding? Like what seems to be the most confusion over that?
Well, I think you touched on the first one. People think that if you settle a debt, it will be deleted from the credit report, and it won't, not right away in most cases. So that rest of that 7 years would have to go by, and that depending on when you settled the debt and how late how long in the past that late payment was. It might be 6 years, it might be 2 years. It just depends on when the lender, settled the debt and what happened there. Usually it's, relatively short. It's usually 2 or 3 years, like in my experience, because you've had the late payments and then charge off and then the collection account and all of that. But there could be a period of years where it still stays on the report. So that's a matter of confusion. Some people misunderstand that when you settle a debt, that means the whole debt is taken care of, and that's what leads to the 1099 form. When you settle a debt, you're agreeing to pay the debt for less than you agreed to, and it may be, a percentage of that debt. It could be a change in the interest rate, whatever it might be. But if after you settle the debt, you're not settling the full debt, you're settling a part of it, the remainder is considered income. If it's forgiven, sounds like it ought to just go away, but that's not what that means. So people misunderstand what that term means. So when they say debt's forgiven, what that means is the lender isn't going to pursue payment. But then that means it's treated as income, and that's when you get that 1099 form. So you don't realize I get to pay taxes on the amount that was forgiven.
Right.
So so that's a huge issue. And then just understanding delinquency dates. People are concerned if they talk to a lender, if they talk to a collection agency, they're afraid they're going to reset a date. and cause it to be reported again. That's not the case, so you can work with lenders. And then the last thing, settling a debt. There's sometimes misunderstanding that, a person thinks that if they settle a debt, it's going to help their credit scores. It won't. When you settle a debt, because you don't repay it in full, pay that debt as agreed in full, it is going to drag down your credit scores. That might not, and you've heard me say this before, tell people sometimes the score isn't what's the most important. That's not necessarily the thing you should worry about. If you're in a position where you can't manage the debts you have, you're overwhelmed by them, you really probably shouldn't be applying for new credit anyway. And that score is, when it's important, is when you're applying for new credit. If you're buried in debt, settling a debt might be the right tool for you. There are other options that might be better, but depending on your situation. But the last thing you might, it might be the score is the last thing you need to be worried about. It's about how you get your financial life stable so you can then move forward.
Totally.
Try to tell people, don't be too obsessed with the score. You have to do what's right to put you in a position to be more financially healthy over time.
And it will, time heals all wounds. And I always say with the credit report, and sometimes taking that hit in the moment to sleep at night, because at least it's paid. So maybe you couldn't, let's just say it was $10,000 in credit card debt, and you were able to settle all of that for, let's say, $6,000. And that was more doable. Where if it stayed the 10 with the high interest rate and you couldn't, and maybe it would continue for years and years and years. And maybe some individuals are taking their tax refund to settle things, to move ahead. I'm not saying everybody should be doing that, but I'm just saying sometimes it does work. And then you can rebuild and say, let me, now that those things it's taken care of, and it can financially help. And, every person, it's a different situation, but it can definitely help.
Yeah. And I agree completely. It depends on your situation. It's a tool in the toolbox. I always tell people, if you're using the tools correctly, it can help you. If you're not, if you're using them to try to get a quick fix, or you think it's going to do something that when you really don't need them, it's a hammer. If you hit the nail, it's great. If you hit your thumb, not so much. So let's make sure you're using it the way it's intended. It can be very helpful. If with credit, people often are looking for that quick fix, and it's emotionally sounds great, and it just isn't there. You're not. It's a history, and it takes time to get into those situations. It takes time to work yourself out, but you can work yourself out of that situation. And time heals all wounds, and patience and persistence. So.
And doing and again, not forgetting about your credit. A lot of times I found when someone goes through this and they're paying, they do want to walk away from credit. And I say, don't walk away, learn from that and rebuild in a healthy way, because we are going to use our credit. There's no way we can get away with not using credit, right? And it's not the swipe of the card. I always say it's many things. It's, where you live or what you're driving, or even a job can look at your credit. Are you a risk or not? And whatever it may be. So I got into this industry. I had bad credit. I don't mind saying it and sharing it. It was a challenging time. And I remember the sleepless nights. I still, it happens. And it's such a brighter future when you're on the other side of that, but it took time, and it's okay. It's okay, but don't walk away from credit completely. Just learn from that.
Yeah, I mean, I have the same story. We all have been there. Before I started at Experian, previous career out of college, I was paying one credit card with another and transferring balances, and got so deep in debt, I had to call my grandma to help. You never, ever want to call your grandma to help. My grandma was,
Yeah.
she would have been a brilliant collector. I mean, she could use guilt like you would not believe. Never wanted to ever want to do that again. But we've all
Right.
been there, you know, so
Mhm.
there's no judgment on our part. We've all
Right.
been there. And it's that we've had the opportunity to learn and experience that,
Mhm.
you know, and you touch on what's really key is if you are going through a situation and you work yourself out, you don't want to make the same mistakes again.
Mhm.
And, you know, some people kind of like you're saying, credit's a financial tool.
Right.
That's the financial problem. And, you know, if you manage your credit well, it can help you have financial advantages.
Mhm.
If you abuse that privilege, essentially, you can take on too much debt, then you're going to have, you know, difficulty in your financial life.
Mhm.
So use credit wisely and
Yeah.
effectively. You know,
Totally.
you know, that's the issue.
Right.
Yeah.
Exactly. I think credit is a fabulous tool, and we just have to learn more about it. That's what you and I are always talking about. Let's learn and share so much about credit, so this way individuals understand. And this was great today, because the 1099 see, people are always like, oh, I didn't have to do anything, you know, and I just wanted everyone to be aware.
Yep.
Yeah.
Yeah.
Tell me, Rod, before you go, just let me know anything new and exciting at Experian.
Oh, there's always new and exciting things that experience from our perspective, anyway.
Mhm.
You know, so you know, we have a lot of tools, things that aren't maybe as new. So Experian Boost, for example, you
Mhm.
know, we all have heard about that, but we keep adding new um, elements to that. So, for example, with Boost, when we launched, you could report your cell phone payments, your utility payments, your streaming services, all, you know, the positive payments, because
Right.
we would get the negative stuff. If you didn't pay them, the collections would come, but you did get credit for paying on time and as agreed. Well, that's why we introduced Boost, because we thought, and our research showed, that if a person's making those payments on time, they're probably a better credit risk than their credit history shows, especially if they have a short credit history or
Mhm.
had some issues. Well, we've since added insurance payments, so positive insurance
Oh,
payments.
that's
In
great.
some cases, you may be able to report your positive rent payments as well. So if you're renting, that can help with building your
Fantastic.
credit history. So really important. You know, we have through our free marketplace and our app or on our website, we have a new feature. If you're looking for a credit card called No Ding Decline, and people are worried, if I apply for a credit card, is it going to hurt my credit history because of that inquiry? If you see a credit card offer that suits your needs and it has a no ding decline indicator, it means you can
Mhm.
apply. If you don't qualify, it's not going to show that inquiry, is not going to affect your credit history
I
or
love
your
that.
credit scores. So kind of gives you that ability to try to, if you're trying to get back in that marketplace, do
Mhm.
so without having to worry so much about that. So you know, those kinds of things are going on all the time. You know, beyond credit reporting, as people think of us as a credit reporting company, and that's just one piece of our business. It's actually about a quarter of our business. So
Mhm.
we have, you know, a mortgage reporting business, we have a fraud business, we have an automotive history business. So we compete with that other one. Ours is better, just so you know. And that's not just my bias, which I do have, but the National Auto Dealer Association uses our reports.
Awesome.
You can get our reports called Auto Check. Um, you know, so we're growing those businesses. You know, we're looking at, you know, how do we use AI to help people get information they need and be more efficient? So there's, you know, all sorts of things going on within the company and
That's
growing
awesome.
that I'm trying to keep track of. And I'm getting old and gray, and it's harder to keep up to speed with everything that's happening. But you
I
know,
know.
it's trying to find ways to help people connect with financial services, you know, trying to help
Mhm.
people be more financially healthy and to try to educate people. So we're online. We're still online on Credit Chat every Wednesday, 2 o'clock Central, 3 Eastern. We
Yes.
have a podcast that we've introduced that we're starting to grow called Credit Chat Live, talking about all sorts
Love it.
of tools and resources and issues in the credit and personal finance space. So we're, you know, very active and trying to reach as many people as we can.
Awesome. I'm going to put all those links in there so everyone can find everything that you've been talking about. And I really appreciate this. You helped a lot with the confusion on 1099C. So
Well,
thank you.